Hello, very good morning to all. I'm Kelvin here again. Welcome back to today's Daily Dose of Market Insights. Very good morning to all. Today will be Tuesday, the 24th of June 2024. All right. So as usual, before we kickstart our Daily Dose of Market Insights for today, let's have a quick look at the disclaimer first. All right, leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exceed deposits. This presentation is not an offer or solicitation to buy or sell, nor financial advice or recommendation for any investment product, as well as any forecast, prediction, or projection in this presentation is not necessarily indicative of the future or likely performance of the product. This advertisement has not been reviewed by the Monetary Authority of Singapore. All right, so as usual, before we jump straight into the short-term intraday technical outlook on the major cross-asset classes that we cover on a daily basis, which is the major US dollar pair, the major stock indices, and the two key commodities market, which is gold XAU/USD, followed by West Texas crude oil. Let's have a recap what has taken shape yesterday, which is pretty much dramatic in my own personal opinion, due to the vicious U-turn in the price action on the broad-based cross-asset class. So yesterday, events are more pertaining to the geopolitical risk premium, or I call it the geopolitical situation out from the Middle East due to this Israel-Iran conflict yesterday. So what we could see over here yesterday was in the first half of the US session, that was Singapore time around 11 p.m. to 12 a.m. Actually, the Iranians actually launched a missile barrage, missile attack against a US airbase in Qatar, but the base has been evacuated in advance, and the missiles were intercepted, causing no harm. So market view this as only as a symbolic gesture to actually de-escalate the situation. All right, so with Iran giving advance notice to the US and Qatar, so basically the the strike coming out from Iran, because you know that at the start of yesterday's Asia session, we do see a bit of risk off yesterday, because over the weekend, US actually strike Iranian nuclear enrichment facilities, and Iran gave a rather harsh verbal warning that they will do a tit for tat retaliatory measures against US key interests in the Middle East. And they did yesterday, and they choose to strike a base, US airbase in Qatar. But however, that airbase is an empty airbase, where Trump claimed that Iran has really gave them in advance. So this is more like an attack to give the Iranians some form of face. And thereafter, Trump actually announces that there could be a ceasefire coming into Iran and Israel today. All right, so over here, what we could see over at his social, this is what he posts on the social media. Officially, Iran will start the ceasefire, and upon the 12th hour, which is today, Israel will start the ceasefire, and upon the 24th hour, an official end to the 12-day war will be saluted by the world, Trump said on social media. So basically, market rejoins, especially on the stock market. It did a U-turn, come break above the downside trigger level on the Nasdaq 100, which is the 21,500 that I mentioned earlier on, and the SPX 500 as well. So it rallied up, cleared our short-term resistance level, and indicating that the sentiment now has started to turn back to the bulls. All right, so what we could see in the U-turn over here, it took shape at exactly at 12:30 a.m. Singapore time. All right, so initially the market sell off upon hearing the news that the Iranian forces launched an attack on US airbase in Qatar. But after that, the clarity starts to come out that this is more like a attack to actually de-escalate the situation, where Iran is a kind of attack, a kind of an empty airbase to actually give them some face. And thereafter, when Trump made the announcement of that potential ceasefire at around the coming to the close of the US session, we see the US stock market continues to rally strongly into the close. So all the major US stock indexes almost closed by 1% by the end of yesterday's US session close. The SPX is up by 0.96%. The Nasdaq up by 1.06%. The Dow Jones Industrial Average up by 0.89%. And the Russell 2000 up by 1.11%. And in today's Asia session, the risk on sentiment continues to prevail. Right now, market is actually now buying on to the story that Trump has kind of declared that the Iran and Israel ceasefire plan is still intact and continues to actually juice up or beat up the S&P 500 E-mini futures and the Nasdaq 100 E-mini futures by 0.5% and 0.7% as we are speaking right now. And even though there's some news media reports stating that Iran will never surrender, and the Supreme Leader Khamenei rejects Trump's ceasefire announcement as false, because there's some various news flow stating that there is no, we call it among the leadership group in Iran that agreed to Trump ceasefire announcement yesterday, but markets choose to so far ignore this negative news flow and continue to bask in the bullish limelight, especially the equities market over here. So what we could see is that there's a positive feedback loop into Asia as well. The Nikkei 225 is up by 1.08%. The Hang Seng rally up by 2%, and also on top of that, anticipation that I share with you is that the front loading of that fiscal stimulus and monetary policy stimulus policy, front loading of it potentially coming out after a 4-day MPC standing committee meeting where the top policymakers in China will gather, and they will start today. It's a closed door meeting and they will end on this Friday. So potentially this meeting will come into a conclusion that these top policymakers may agree to actually front load more expansionary fiscal and monetary policy stimulus to negate the ongoing number one, the trade tension that US and China is still being embroiled onto. All right, so they are actually up by 2% right now, the Hang Seng Index. And going forward to the rest of the Asia region, also very positive as well. The Kospi is up by 3%. The TAIEX, the Taiwan weighted stock index, which is the benchmark of the Taiwan stock market, up by 1.68%, and Singapore STI is up by 0.5%. The ASX 200 is up by 0.9%. So I would say that at the moment in time is risk on behavior, and because of that ceasefire that was being potential ceasefire that's been proclaimed by Trump yesterday, it causes oil price to actually plunge. So we see two-way volatility in oil prices yesterday. So what you could see over here right now is that this is the oil price. So oil price initially rallied by 5% upon the weekend bombing of the Iranian nuclear enrichment facility by US. So it gap up in the open. Okay, rally up to close to 5% to 4%. Then thereafter, it can't maintain the momentum and ended yesterday's US session by down by negative 9% by shaping this bearish engulfing candle that totally wipe out the gain that was being seen on last 2 Fridays ago, which is 13th of June. So this 13th of June did that bullish breakout over here after the start of the Israel attack on Iran that kickstart this ongoing hostility and this bearish engulfing candle because of that ceasefire announcement that's been announced by Trump, indicating that perhaps all things goes back to normal again. But what's interesting over here is that there's some support that is being formed right exactly at the 20-day moving average. All right, so things doesn't seem to be so simple at this moment in time, because there are still some deep buyers coming back into the oil market, providing some support at the 20-day moving average. where price action managed to be trading above it since 12th of May. So something later I'll share with you what are the key levels to watch for West Texas Oil on a key intraday basis. All right, then interestingly, we start to see gold prices also starts to actually tumble yesterday. So gold prices initially tried to push up above that 3,400 upside trigger level, but only printed a high of 3,394 before closing down slightly, almost unchanged at 0.01%. And in today's Asia session, there was actually an initial sell-off over here, but that sell-off still managed to find support at the 20-day moving average, where previously intraday sell-off has been seems to be supported since 19th of June, which is last Thursday. Over here, you could look at my chart. So it seems to us that there is also some form of deep buying coming back into gold XAU/USD as we are speaking right now, refusing to break below the 20-day moving average that is continued to act as a key near-term support level every time that there is an intraday sell-off that's being touched by it. On last Thursday, we could see over here, and right now it's trying to form a doji candlestick, so still indicating a bit of indecisiveness by the bulls and the bears to actually come out to detect a better I mean, there's no clear directional bias at this juncture. All right, so later I'll touch on the goal again on the short-term technical perspective, but for sure we know that this 3,350 level, which is the 20-day moving average, is indeed a key near-term support that is supporting the gold every time it faces an intraday sell-off since last Thursday, 19th of June. All right, something very interesting. And what you could see is that the dollar also did a erratic U-turn over here. So the dollar actually sold off as well. So that actually came in within our expectation, but because we still, yesterday I do mention that there is no clear dollar strength yet, because the euro against the dollar and the sterling against the dollar are still trading above their respective key short-term pivotal resistance level. And the only dollar strength that is being seen is in the Aussie dollar and the dollar yen. So despite the dollar yen, we also have a neutrality stance because of the unclear technical element that I highlighted yesterday for you guys. So also around this erratic U-turn on the US dollar. So in fact, the US dollar strength dissipated way earlier than the rebound that is being seen on the US stock market yesterday. So US stock market rebound came in around 12 a.m. midnight Singapore time over here. So you go back to the chart. Right? So the rebound came in at around 12:30 a.m. Singapore time, but the sell-off in the US dollar strength, or I put it that US dollar strength, dissipated at the start of the US session at around 2135 hours, means 9:35 yesterday, and it starts to see a sell off as we are speaking right now. So if you look at this, the 5-day rolling performance as of today, and if you look at the 1-day rolling performance of the dollar as of now we are speaking, the dollar continues to remain weak. And in fact, right now, the dollar is the weakest against the yen, the Aussie, and the Kiwi, because like I mentioned, the Aussie and the Kiwi are considered as high beta currency. And given that right now we start to see the risk on sentiment starts to seep back into the equities market, that actually benefited the Aussie and the Kiwi. That means that's why the dollar is the weakest against the Aussie as we are speaking right now. Based on the 1-day rolling performance, the Aussie is down by negative 0.6%, followed by the dollar yen that is down by negative 0.5%, and the dollar Kiwi is down by negative 0.63% over here. Right, so later I'll touch on the chart of the Aussie dollar and the dollar yen, and as well as the other major currency. So another news flow I want to highlight came from more of the Federal Reserve, we call it speak, or we call it a Fed speak. So yesterday, there's this Federal Reserve official, or I'll say governor, Bowman. She actually favors July interest rate cut if inflation stays low. So far, there is actually two the Federal Reserve officials that is now favoring a July cut instead of Fed Chair Powell during his press conference in the latest FOMC meeting, which is concluded last week, that he preferred to actually wait and see due to inflation being elevated causes by the current White House administration trade tariffs policy. So Fed Governor Bowman almost echoed the same remarks as Fed officials Wheeler last Friday, supporting of a July cut if inflation stays low. But however, the CME Fed Watch 2, which is based on the latest news flow and event that taken shape, yes, the probability of the 30th of July Federal Reserve meeting still favor a rather high odds that the Fed may maintain the benchmark policy rates status quo at the same rate of 4.25% to 4.5% for the fourth time this year. So yeah, it reduced after Bowman dovish remarks. So one day ago, before her remarks, it was at 86%, and after her dovish remarks, it reduced slightly to 79.3%. So it's still rather higher. It didn't hit the 50% mark or slight 50% level. So market still has a higher probability view that the Fed will still stand pat in 30th of July. So based on the latest news flow and event that taken shape so far, despite these two Federal Reserve officials, Wheeler, which is last Friday, and Bowman yesterday, sounding or expressing more dovish view, stating that they are in favor of a July cut. And if you look down the line, the calendar, still the Dow doesn't really change much. It's only that the second meeting, the second potential second interest rate cut. So the first interest rate cut, market is still viewing it to come in September, which is 17th of September 2025 FOMC meeting, where we have a high chance of 93%. The Fed may reduce the Fed funds rate, which is the policy rate, by 25 basis point to 4% to 4.25% from the current rate of 4.25%, 4.5%. And thereafter, we will see it stand pat almost 51% chance that it will stand pat. So right now there could be a slight chance because it's about 50-50. There is a 51%, 48. So I'll say it's 50-50. So there's a 50-50% chance that the next rate cut may come in the October meeting. All right, over here. Previously, this was very, very low, around 20+% or 30+% prior to Bowman remark, dovish remark over here. And the highest chance of a second rate cut still lies on the 10th of December 2025 meeting, FOMC meeting, where we have a 80% chance that the rate will be at 3.75% to 4%. So overall, the market is still only looking at two interest rate cut this year by 25 basis point each. Is only the second cut now has a slightly higher chance that it may come in slightly earlier on the 29th of October 2025 meeting. All right, so that is the current pricing of the Fed funds futures market. Not much of a base of a new changes. All right, so perhaps this will start to change again after another key event that could that will be taking shape today. All right, so later I'll share you what is this key event that could influence the expectation of future Fed funds rate movement. All right, so now with that, let me share with you some economic calendar because yesterday we do have a slew of PMI data releases. Okay, so let me share with you the PMI data releases on a very long-term basis. So this is the PMI data, flash data. So yesterday we do have the Eurozone PMI data. So for the Eurozone PMI data, if you look at the services PMI, it actually improved. The services PMI actually improved to, okay, where is it? Yeah, this is the services PMI. Okay, so the services PMI in Eurozone actually improved slightly from 49.7 to 50. That came in within market expectation. And also the manufacturing PMI, I would say that is almost the same level at 49.4 from 49.4 previously in May, and but slightly below market expectation of 49.8 over here. And for UK, the services PMI also came in within expectation as well, 51.3. It improved to 50 from 50.9 in May, pardon me. And the manufacturing also improved to 47.7 from 46.4. That was previously printed in May. And most importantly, the US manufacturing PMI. So the manufacturing PMI in US didn't decline. It actually maintained the growth, we call it momentum of 52, very similar to the previous reading that was also in May, and slightly above market expectation of 51. And most importantly, the services flash PMI managed to go above expectation. Market is expecting a slight decline to 52.9 from 53.7 that was printed in May. Actual figure coming in at the flash figure came in at 53.1, which is above what market is expecting. So that also created a bit of firmness in the US stock market yesterday. But however, the bulk of the rally of the US stock market came in due to that potential ceasefire announcement coming out from Trump himself, and also yesterday's Iran attack on US interests in Qatar. That means the US airbase in Qatar is more like a stage attack rather than a real attack over here. All right. So with that, that sum up the sorry, I have a cough. So with that, that sum up the first segment of today's daily dose. Let us now move on to the second segment, which is the intraday technical outlook on the major cross asset classes. So with that, let me expand my screen so that you guys could have a better view of the charts. All right. So let's start with the FX market first over here. Okay, starting with the euro dollar. So euro dollar, we do maintain our bullish bias yesterday. So the bullish bias hit our resistance at 116.10 as intended. So upon bridging above 116, hitting 116.10 and clearing above the 150.30 level mark, we will now tighten our short-term pivotal support level, because very clearly it has really shaped a bullish reversal right exactly at the retest of that 20-day moving average on this Monday, which is yesterday. So we will tighten our short-term pivotal support level for today at 115.30, 1.1530 level, and also the former minor swing high of yesterday. That was the the European session minor swing high. Then thereafter, upon hitting this, breaking above this minor swing high over here, we see it rallying very steeply. So this is indeed a kind of a upside trigger level on the intraday basis, now turns into a key intraday pullback support level. All right, so 115.30 tighten short-term pivotal support for the euro dollar, still maintaining our intraday trend bullish bias, but do not forget it has already hit the 116.10, which is the minor range resistance since Thursday, 12th of June. And given that the hourly RSI has really hit the overbought level, there could be a minor pullback taking shape during the European session. So as long as this minor pullback didn't surpass below this tightened short-term pivotal support level at 115.30, we'll be looking for chances for any potential corrective minor pullback to maintain our intraday trend bullish bias. Above 116.10 thereafter exposes the next resistance level at 116.60, 116.90. Above it sees 117.25, 117.50, which is a Fibo extension clustering zone, and as well as the upper limit of this medium-term ascending channel that I drew from the low of 12th of May. Only a bearish breakdown and an hourly close below 115.30 that would negate the intraday bullish bias for today and see it sliding downwards to revisit the 114.40 level / 114.10 level, which is the 20-day moving average, and as well as the lower limit of this medium-term ascending channel. Right, so that's for the euro dollar, still maintaining our intraday bullish bias in any minor pullback, holding above 115.30 short-term, tighten short-term pivotal support. Sterling dollar, so the sterling dollar also cleared above our resistance level at 135.30, 135 figure level, enrolling to actually retest the 13th of June swing high area at 136.40. So with that, we will tighten our short-term pivotal support level, because right now it staged a bullish recovery, right exactly our pivotal support that we have on late last week. And also we start to see a V-shaped recovery as well, clearing above the 20-day moving average as we are speaking right now. So given that the hourly RSI is now at the overbought level, there could be a risk of a minor pullback during the European session kickstarts. So as long as this minor pullback didn't surpass below our Titan short-term pivotal support level at 134.50. So this 134.50 is the also a yesterday upside trigger level, which is the minor swing high that's being seen on Monday yesterday at the 3 p.m. mark. After clearing above this 3 p.m. 135.50, notice how sharply the market actually rallied on the sterling dollar. So this is indeed a minor upside trigger level, now turns into a key minor support level. So 134.50. And also if you do the Fibo retracement of this one-way ticket upwards, that also coincide with the golden ratio of 61.8. All right, 61.8%. So with that, maintain our intraday trend bullish bias on the sterling dollar using a Titan short-term pivotal support for today at 134.50. Resistance level to watch 136.40, followed by 136.90 on the sterling dollar. Only a bearish breakdown below 134.50 will negate today's bullish bias to see a retest towards the support, towards the medium, towards the next support level at 133.95, 133.70 again. Next up will be the Aussie dollar over here. So the Aussie dollar yesterday, we do have a bearish bias. So the bearish bias almost hit the lower limit of our medium term range support level that is in place since 23rd of April. So this 23rd of April over here is a very complex sideways range configuration where price action after several tests at the upper limit, which is 65.37/65.45, it can't break above, and it dwindled downwards towards the lower limit of the range, which is taken shape yesterday. And right now it actually rallied all the way up and hit the alternative resistance at 64.95 over here. Given that the hourly RSI now is at the overbought level, and in fact it starts to reintegrate back below the overbought level, there could be a chance of a minor pullback taking shape right now over here. So I will have a pivotal support zone over here. So this was previously yesterday pivotal resistance, now turns into a pivotal support level. And given that it's very close to the 200-day moving average as well, so it will be a zone for today. Excuse me. Okay, so this will be 64.30. So 64.55, 64.30 will be my 64.30. So this will be my short-term pivotal support zone over here. So there could be a chance of a minor pullback, all right, into this pivotal support zone. Then thereafter, I will be flipping to a intraday bullish bias again above 64.95. May see a retest at the medium term range resistance level at 65.37/65.45 again. Only a bearish breakdown below 64.30, then that would invalidate today's intraday bullish bias within the range configuration to see it floating down back to the lower limit of the medium term sideways range. Support level to watch out for thereafter will be at 64.07, followed by the lower limit of this medium term sideways range at 63.60/63.50 next. All right, next up will be the dollar yen. All right, so the dollar yen yesterday we turned neutral due to mixed element, and indeed it plummeted downwards over here and broke below our lower neutrality limit at 14625. All right, so given that the hourly RSI now is coming close to the oversold level, there could be a potential minor bounce, given that it's also approaching this minor support level at 14520. So minor bounce, first resistance level to watch will be at 14625, and the short-term pivotal resistance will be at 14715, which is the minor swing high area formerly on 14th of May. So this 14th of May initial push up considered as a failure bullish breakout. And if you do the Fibo retracement of this ongoing sell off from yesterday's high at around the 148 figure level, that also coincide very closely to the golden ratio of 61.8% over here. So with that, we will flip to a intraday trend bearish intraday bearish bias within a complex range configuration that is in place since 27th of May. All right, so this is a complex range configuration for the dollar yen. So using 14715 as my short-term pivotal resistance level, and bear in mind there could be a bounce taking shape during the European session, given that the RSI is now at the oversold level. So so bounce potential could be between 14625, maximum 14715, which is my short-term pivotal resistance level. Maintain. Then thereafter we will have a bearish bias over here below 14520 exposes the next near-term support level to watch will be at 15550, 14390, which confluence with the 20 and the 50-day moving average. Only a bullish up move with an hourly close above 14715 that would invalidate today's intraday bearish bias to see a squeeze up to expose the next near-term resistance level at 14860, which is the minor swing high area of 13th of May. So that's for the dollar yen, flipping to a bearish bias in any signs of any potential bounce that could take shape thereafter, using 14715 as my short-term pivotal resistance. All right, so that sum up the intraday technical outlook on the major dollar pair. Let us now focus the major stock indices, starting with the Hong Kong 33. So the Hong Kong 33 managed to recapture the 20-day moving average, which is also our pivotal resistance yesterday at 23,690. Hence, right now the corrective decline sequence has been exhausted or game over, and the owners now shift back to the bulls to continue this impulsive up move sequence over here. So given that the hourly RSI is at the overbought level, is already at the grossly overbought level, so it's almost the highest level since 6th of March right now. The current level is the highest since 6th of March. So given it's a rather high overbought level or extreme overbought level, and it's fast approaching that minor swing high of 16th of May, which give rise to this last leg of this minor corrective decline that ended on last Friday, there could be a chance of a minor pullback that could take shape during the second half of the Asia session today. So pullback support level to watch will be at this 23,900 level, 23,900 level, and we will use this gap up support level here, the gap up and the 20-day moving average, and as well as yesterday's US session low. So it will be a zone over here at 23,690, 560. 23,690 slash 560. So this will be my short-term pivotal support level. So using 23,690 slash 560 short-term pivotal support, as long as this minor pullback, this surpass below 23,690 slash 560, we will flip to a bullish bias back to the Hong Kong 33, representing the Hang Seng Index after 24,240 exposes the next resistance level at 24,490, then thereafter 24,850, which is the minor swing high area of 18th of March and 19th of March over here. Only a bearish breakdown below 23,560, then that would indicate that this move up here is a fake bullish breakout above the 20-day moving average, and the price action will resume another round of choppy corrective decline sequence to expose the next near-term support level at 23,260, followed by 23,060, which correspond to the rising 50-day moving average. Okay, so that's for the Hong Kong 33. Next up will be the Japan 225. So Japan 225, yesterday we do have a bullish bias. So this bullish bias hit our resistance level, which is the range top of this ongoing minor ascending triangle configuration that is still evolving at this point in time. So with that, we will now flip back to a bearish bias because given the fact that the hourly RSI has started to shape a lower higher over here, whereas we see a same high on the hourly on the price section. So using 38,850 as my short-term pivotal resistance level, flip to a bearish bias stance. Bearish bias stance for today. We in this ongoing minor ascending triangle range configuration that is still in play on the Japan 225, which represent the Nikkei 225. Support level to watch will be the congestion area between the 200-day and the 20-day moving average at this 38,145/035, which is so the lower limit of this minor ascending channel. Okay, minor ascending triangle range configuration. Pardon me. Right, so only a bullish breakout and hourly close above 38,850 that would invalidate today's bearish bias and see a bullish breakout from this minor ascending triangle range configuration to expose the next intermediate resistance at 39,560, which is a Fibo extension cluster extension level, and as well as the minor swing high area of 13th of February and 14th of February. All right, so that's for the Japan 225. Next up will be the Germany 30 over here. So the Germany 30, yesterday we do have a bearish bias for it to expose the support level at 22,910, and but instead it managed to held above the 50-day moving average and stage a bullish breakout during the US session above the former minor descending channel resistance level. All right, so given this positive observation where it managed to held at the 50-day moving average and as well stage that bullish breakout from that minor descending channel resistance, we will now flip to a bullish bias on the Germany 30, but given that it's coming very, the hourly RSI has really hit the overbought level, there could be a minor pullback taking shape to actually retest close to this former minor descending channel resistance, now turns into a key intraday short-term pullback support level, which is at 23,280. All right, so using 23,280 as my short-term pivotal support level. So as long as any minor pullback didn't surpass below 23,280, we will flip to a bullish bias for today on the Germany 30, representing the German DAX. Two key resistance level to watch on the intraday basis: 23,710, followed by 23,880, which is the confluencing with the 20-day moving average as well, I think as a resistance, and the minor swing high area of 12th of June. All right, so that's for the Germany 30. Next up will be the major US stock indices, starting with the US Wall Street 30. So the US Wall Street 30 also did a bullish reversal over here, clearing above the 200-day moving average. So with that, we got to respect the price action and flip to a bullish bias for today. So, but however, there could be a risk of a minor pullback. So minor pullback first support level to watch, given that the RSI is at the overbought level right now. So minor pullback first support level to watch will be at 42,595. Then thereafter, the pivotal support level will be at 42,350, which confluence with the 20-day moving average. So using 42,350 short-term pivotal support level on the US Wall Street 30, flip to a bullish bias stance for today. Resistance level to watch will be at 43,085, followed by 43,290, which is the minor swing high area of 5th of March over here. and also potentially the upper limit of this ongoing ascending wedge configuration that it could be involving right now. So that will be the US Wall Street 30. Next up will be the S&P 500. So the S&P 500 also cleared above our pivotal resistance at 6,050 and also managed to actually traded above the 20-day moving average, come break below the downside trigger level, which is 5,920 that I highlighted last week. And because of the survival at the 5,920 and the bullish breakout from the pivotal resistance at 6,050, we will flip to a intraday bullish bias for today. But nevertheless, there could be a minor pullback taking shape. So minor pullback level to watch in the first step will be at the range of 6,050, 6,030. Maximum will be the former descending trend, minor descending trend line, where I previously drew from the high of 11th of June and 16th of June minor swing high, now turns into a pullback resistance, a pullback support level, pardon me, at 6,005 over here. So 6,005 also confluence with the 6,000 psychological level. So using 6,005 as my pivotal support level, if as long as any minor pullback didn't surpass below 6,005, flip to a intraday bullish bias on the SPX 500. First resistance level to watch 6,093, then thereafter above it sees 6,151 coming in, which is the current all-time high area. Only a bearish breakdown below 6,005 and the hourly close below it, that would invalidate today's intraday bullish bias, indicated that yesterday move up is a fake hit, and price action will start to do another round of choppy corrective movement to revisit 5,920 again. All right, so that's for the SPX 500. Lastly will be the Nasdaq 100. So the Nasdaq 100 also squeeze up over here and also cleared above our pivotal resistance level at around the 22,040 level mark, okay, 22,050 level over here. So given that the price action also managed to reintegrate back above the 20-day moving average after 3 tests at the downside trigger level, but it can't have a proper breakdown below it, which is at 21,500, indicating some form of the boost has started to come back on the short-term intraday basis. So given that the hourly RSI has already hit the overbought level, there could be a minor pullback taking shape during the European session and stretching into the start of the US session. Pullback support level to watch will be at 21,890, maximum 21,750, which is my minor congestion area of 23rd of June over here, okay, which is Monday. Previously, there's some form of hesitation at the start of the European session. Then thereafter, there was a sell-off at the 12 a.m. mark Singapore time yesterday before it did a bullish breakout. And thereafter, we see a series of bullish movement thereafter. So this is something like an upside trigger level, a minor upside trigger level on the intraday basis, now turns into a key short-term pullback support level at 21,750. So using 21,750 short-term pivotal support level for the maximum pullback that it may unfold. So as long as this pullback that may take shape thereafter didn't surpass below 21,750, we will still maintain, we will have an intraday bullish bias for it to retest in first step the current all-time high area at 22,200, 22,250 on the Nasdaq 100. Only a breakdown below 21,750 that would invalidate today's intraday bullish bias, and also stating that yesterday's push-up is a fake hit where price action will convert back to its choppy corrective decline sequence again, revisiting 21,500. So that's for the Nasdaq 100. Also sum up the intraday technical outlook on the major stock indices. Let us now turn our attention to the commodities asset classes, starting with Gold XAU/USD. So for Gold XAU/USD, price action come break above 3,400 level, which is the 3,400 level that we highlighted yesterday, where this is my first resistance level to watch in my bullish bias case yesterday. And thereafter, it thundered downwards, managed to find support again at the 20-day moving average, which is at 3,346. All right, so with that, we will flip to a neutrality stance between 3,346 and 3,400 for today. Only a breakdown below 3,346 and the hourly close below it may see a residual corrective decline move to revisit the next support zone or expose the next near-term support zone at 3,320, 3,302, which is the confluence with the rising 50-day moving average. So that's for gold XAU/USD. Next up will be the West Texas crude oil over here. So the West Texas crude oil, yes, it broke below our short-term pivotal support level. We have a very tight one at 73.60. It went all the way down, hit the 20-day moving average, and the hourly RSI has also hit the grossly oversold level. So it's the most oversold level at this 15. Where is it? This okay, what's this oversold? Yeah, 15.48 is the lowest oversold level since 4th April this year. So given that it's grossly oversold, there could be a chance of at least a minor counter trend rebound taking shape to retrace yesterday's steep sell off over here. So since it's bouncing off from the 20-day moving average and it starts to form a hourly bullish candlestick as at the 7 a.m. mark over here, followed by several positive follow through candlestick. So using 66.20 as my short-term pivotal support level, looking out for a potential minor kind of a rebound scenario taking shape to retrace yesterday's steep sell-off. First resistance zone to watch will be at 70.60 slash 69.15 slash 70.60 over here. All right, so this level is pretty key, all right, because it's confluence with the 200-day moving average as well, and as well as the former minor descending resistance from 28th of September 2023 high. So later during the kickstart of the European session and even the later part of the session today, the price action managed to surpass above 70.60. That means that indicate that yesterday's intraday sell-off is a extreme move and a fake move on the downside, and clearing above 70.60 will actually turn the owners back to the bulls again, where price action may revisit 73.60 next. So this is a very important inflection level to watch, 70.60 slash 69.15. So if the bulls manage able to surpass above 70.60, that means yesterday's bearish push down is considered as a failure or a fake hit over here. So it is more like a noise. And if price action managed to surpass above 70.60, the owners will flip back to the bulls again. However, if we start to see price action instead of pushing upwards and starts to gyrate downwards and have an hourly close and a breakdown below 66.20, then I will say that the 13th of June bullish breakout move is more or less game over, and the owners will start to transverse back into the bearish move for the West Texas crude oil to expose the next near-term support level at 64.05 followed by 62.50. Right, so that sum up the intraday technical outlook on the major cross asset classes. Let us now take a look at the economic calendar to see what are the key data to look out for today. So the key data to look out for today as we head into the European session will be Germany info business climate data, which is considered as the sentiment for businesses. That will be out at 4 p.m. Singapore time over here. And at the same time, we have Bank of England governor speaking, Governor Bentley speaking at 4 p.m. Singapore time. That could influence the movement of the sterling pound and the sterling crosses. Then thereafter, for those who has interest in the dollar Canada and as well as the Canada dollar crosses, at 8:30 p.m. Singapore time, we have the inflation rate from Canada out, and followed by the US start of the US session. We have 9 p.m. Singapore time. We have ECB President Lagarde speaking over here, and we have then thereafter at the big boss himself, Fed Chair Powell, will give his first testimony to the House, all right, to one of the House Finance Committee at 10 p.m. Singapore time. So market participants will be hearing very closely what's his view on the current inflation trend in the US and how does it impact going forward US Federal Reserve monetary policy decision, especially what has taken shape in the last 2 weeks due to that geopolitical situation in the Middle East. And at the same time, we have the Conference Board Consumer Confidence as well at 10 p.m. Singapore time. So this event and the Conference Board consumer confidence data could potentially influence the major US stock indices, the major asset, the major dollar pair, and as well as gold XAU/USD. And not forget, today it will kickstart the China National People Congress Standing Committee meeting, where top policymakers gathered to strategize the economic plans for China going forward. So that will kickstart today and it will end on Friday. And sometimes during the end of every day session, there could be some local press reporting what is being discussed because it's a closed door meeting. All right, so that sum up today's daily dose of market insights. I'm Kelvin here signing off, and I wish you all a great day ahead. We shall speak again tomorrow. Thank you.